Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going through the comments section. I'd like to answer some of the comments. One person said, one question about a platinum physical ETF. Is there any case when this makes sense? Maybe to avoid VAT on physicals, which, for example, in my country is 21% on platinum and other precious metals. You can also pay a lower long-term capital gains tax when you go to sell it. Some people look at that. The the thing that I like about physical metals is I don't know what if these ETFs really hold this stuff. I don't know. You can't redeem it. So what exactly do you own if you can't redeem the physical metal? You just own a piece of paper. You own a claim check, which used to be our currency. Our currency were claim checks to physical metals. So you could take this claim check, go in, put it in, and get the metal and convert it to that metal. So really, it was a way to keep the entire money system honest. It was a physical constraint. And what happened was the United States in the 1960s started cheating. They were cheating the system. They printed all this money. You can see it in the monetary base to gold ratio. And they printed a whole bunch of money, and then other countries were like, I don't believe you. We're going to send a ship over there, and we're going to take the gold. Here's your money, give us all the gold. And they're like, whoa, 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 whoa. Hold on a second. We know what's valuable. We don't want to, get rid of all of our gold. So they broke that link. An ETF is the same. To me, it's the same thing. You've got these claim checks that you can't actually convert to physical metal. And if things get pretty bad, and I don't know how bad they're going to get, but it looks like they're getting very bad in other currencies, I would be a physical holder. Now, it's up to you on what you want to do for that VAT on the physical, that tax. Now, I mean, I don't know. I don't know what I would do with these taxes that you guys have. Perhaps find a country that doesn't have the tax, go on a very long trip, a day or two, and buy a bunch of physical and then bring it back. I don't know. I don't know how to skirt that VAT or buy it off of other the physical metals off of other individuals. Maybe that's an option. Maybe buy them from eBay. I don't know how maybe they charged on that. But if there's other ways that you could maybe find around it, maybe there's a way to get some metals. Now, this person said, "Hey Andy, I will tell you the situation in Lebanon. 1 ounce of gold in Lebanese lira was 2.7 million a couple of years ago. Now 1 ounce of gold is 50.4 million lira. With all the financial and political issues, agree with this thesis 100%. Great work as always." And that was when I was talking about an example where gold was going up kind of parabolic. And what really was happening is I had two different currencies, one in lira, one in the dollar. And one of them was going vertical, the other was basically sideways. But it was the same asset. It was both gold, just priced in different currencies. So it does matter what you're looking at. And I think that, people are going to run to the dollar in the beginning. I'm agreeing with that. We can see it. Then I don't know what's going to happen to the dollar. I think they're going to have a battle because they're printing the dollar like mad. That is inflation. It's losing value. Just because the index is going up doesn't mean it's gaining value. It just means that it's less weak than the other things that it's being measured against. It's losing, dollars will lose value against real things. So the game here for people in the entire world, and this is going to happen to everybody in the entire world, and I don't know if people understand this, I'm trying to get it through, everyone will run to physical things. And what that means is when you have, I don't even know how many trillions or quadrillions of dollars out there, they're just paper currencies. All of the value that those things were stealing, the paper currencies are worth nothing. They are literally worth zero. And at some point, gold is going to account for the stupidity of people using paper currencies. And what's going to happen is all the value is going to get transferred into precious metals and commodities and real things because that is what has value. Even these intangible assets in crypto have no value. They're, I mean, to some extent, if people still believe they have value, but they're not backed by anything. It's a fiat currency that was created by math and used a bunch of energy. But what is it? What do you actually own? A string of zeros and ones? Okay, so what? When people get really afraid, what are they going to run to? I think it's going to be physical items. And of everything in this world, there's only been three things that have really retained value: art, real estate, and precious metals. That's it. That's it. That's all the three there is. I probably have over 60% of my net worth in physical things, physical real estate, physical precious metals. I've got collector's cars, a collector's car. And then I've got my equity stuff. I mean, if everything you own can be accessed by a little phone, what makes you think that's going to retain its value? What if you were wrong? What if cryptos go to zero? What if some of these things online, businesses have problems with their inputs and they start to really eat it? We'll call it a shortage of energy or a shortage of minerals or whatever it may be. And they're pricing these businesses, which is a price to earnings ratio, massively high and thinking that the future is going to be this grandiose deal. And what if that never materializes? Businesses have all gone to zero over long periods of time. All of them. All currencies have gone to zero. And I'm not saying that, I'm not being a doom and gloomer here. I'm just saying, you know, I do think you have to have some physical metals. I mean, there isn't enough to go around to let you know that. If everyone in the United States bought 2 ounces of silver, it would deplete the entire year's production with 2 ounces. How much is 2 ounces? $50, $60, somewhere in that range. And you would deplete the entire world's silver supply in just America. How much silver is there for people to buy in the entire world? An ounce per person? I mean, that's about it. Can everyone in the world buy 1 ounce of silver? Sure. Now, what happens if your currency is eating it? Like, it is literally eating it. What are you going to run to? If all you have are physical things that you can run into, that maybe that's what people perceive, and you have 1 ounce per person of silver in the world, and people start running at it with a lot of money. Let's say you're running at it with $10,000 or $20,000. Let's say other people are running at it with a few million, or maybe even tens of millions of dollars. There isn't that much stuff out there. There isn't anything out there. Like, it can't absorb it. So the only time that you buy this stuff and can be able to buy it in any sort of, we'll call it large quantity, is when it's really low. And that's what the ratios are telling us. They're telling us that this is free, that physical precious metals are free. And if you look at the ratio of the monetary base to whatever it is, silver, gold, doesn't matter what it is. It's all super cheap. It's never been this cheap. So I'm not saying that we have to put everything in it, but I think it's prudent to have some money in it, in the physical things, like, the physical, and this is a mouse, a physical thing that you can hold. And to me, that seems like the least risk way to even hold, and even to hold it. Because what if these ETFs do go way up and they say, well, we're going to tax your ETF 50%? Well, what are they going to do with physical? You can come to your house and start shaving it off. I mean, you can ride through some pretty, crappy stuff, and you can do barter, you can do stuff out of the system. Of course, they don't want that. They want you in crypto. They want you in these electronic things so they can control it and tax it and see it. They want to control. And I'm not really cool with that. Get me out of the system. That's kind of where I'm at. He says, and I don't know who he is, but he says money was printed via bond purchases. It went to banks, and banks give it back to the Fed. So money didn't get to the markets. I said, what about house prices rising and cheap mortgages? COVID relief for businesses, vaccine purchases. How could all printed money not have made it into circulation? Is M2 in circulation or in total? M2 is in circulation. guys, there's a lot of people, I don't know if they know what they're talking about. Like, I'm not saying that I know everything, but I've been watching some videos and it's dumbfounding me. Some people are saying that we don't have inflation. This is not inflationary. Okay. Why are prices going up of everything? Why do we have decreasing product in the same price? Shrinkflation. How are all of the prices of all these things going up? If we have deflation, we would see prices going down. We don't see that. We do not have deflation. We have inflation. Now, you can argue how long that's going to take, how long inflation's going to be. You can't argue that we don't have it. I mean, that's being delusional. So I mean that's my take on it. We definitely have inflation. The CPI is a doctored number, and it's still up 6 point something percent. He says Jim Rickards is on Stansberry saying inflation peaked because printed money didn't get loaned anywhere. Well, that's my whole thesis on this channel is the real estate expansion phase. That is credit expansion. That is being loaned into existence. It's expanding the credit. We are just entering this expansionary phase, so it may take some time to heat up, but they did give out money to people. That is inflationary. That money did get created. That money, all money gets loaned into existence. So we have inflation, and the expansionary phase is where it's going to come from and be sustained, in my opinion. And a lot of other people, and I don't know if you're talking about Jim Rickards or if you're talking about Stephen Van Meter or whatever, but I mean, we'll see. We'll see if it comes. If the M2 money supply, it went vertical, I think inflation's coming. It's going to be a big move in inflation. 6% inflation is the official understated rate. 100% agree with that. Ben Rickard says, isn't that the guy in the short? Ben Rickard says globally we've spent 17 trillion on pandemic responses. That's a lot of money. Andy, out of all of these companies, which do you see as the most potential for short-term and long-term growth in terms of uranium? I've heard you speak good of Little Govy, which is Goviax. He's Banny and Govy, maybe. So Bannerman and Goviax. Yeah, I like the African crew. The African crew consists of Bannerman, Goviax, Global Atomic, Forces Metals, and Deep Yellow. Those are the ones that I like. Those are the ones that I've overweighted. I've also overweighted Encore Energy. I've built positions in Uranium Royalty Corporation. And I've got smaller positions in other companies. I did overweight Baseload Energy, which is an exploration company. Exploration companies have a little bit more risk. I have spread out amongst all the exploration companies in Canada. Because if anyone hits something really big, I've got a little bit in it. So that's how I've played it. Doesn't mean that I'm going to be right, though. There could be ones that somehow get in there and kill it. Maybe I'm missing something. And most likely, I'm missing something. I mean, you're not going to catch everything. But I have overweighted all of the African companies. All of them. It's been drilled into my brain that Austrian economics, that inflation occurs from an expansion of the money supply. An increase in higher wholesale retail prices are a symptom. In college, I wrote a paper on the history of fiat currencies that once had some form of precious metal backing in the last 2,000 years. There were hundreds of probably examples of currencies failing. Every single one of them failed. Not a single one survived. I agree. All fiat fails over time. So all I do is I store my wealth in, so think of savings. I save my wealth in physical metals. Then I do the swapping game between metals to increase my ounces of metals. That's it. That's all I do. Is it smart to do that? I mean, we'll see. These metals are incredibly rare. Like, I don't think people understand it. They are printing money. Like, Now let's do the calculation. If they did create 17 trillion, since somebody said that, and I don't even know if my calculator will put 17 trillion in there. We'll see. 17, that's million, billion, trillion. Oh my goodness. And let's say we've got like 3 billion ounces of investable gold. So if you were to take just the money that they've printed for this from the COVID, the COVID C-19 era, just if 17 trillion is the number that I said earlier that somebody had printed, gold accounting for what they printed since C-19 would equate to $5,666 per ounce of gold. And it's probably higher than that because 3 billion ounces isn't the total investable ounces. And what happens is if it were to account for it, you'd get $6,000 gold just off of what they've printed in the past 18 months. And this is just for America. And that I'm taking the entire world's gold. Now, if we were to do this and we were to look at how much money was created worldwide, and we were to use the investable ounces that people could actually run at, that people would be willing to sell, I don't know what the price could be. $250,000 an ounce, $1 million an ounce? I don't know. How much money have they printed worldwide? It's ridiculous amounts. It's just copious amounts. So that value should get transferred back to precious metals if it were to take on the role of a monetary metal. If it were to regain that monetary aspect again, and the entire world were to run at it. I don't know if that's going to happen. I'm not saying that's going to happen, but I'm just saying it's pretty safe to be buying physical metals at their like all-time lows when everyone's printing a bunch of money. Like, I just see this as completely, like, it's just obvious to me. Maybe I'm wrong. Whatever. I just see it as obvious. I mean, this is a high likelihood that this stuff's going to go up quite a bit and go parabolic. So, I mean, that's kind of how I look at it. The timing, I don't really care, because if it happens 2 or 3 years from now, so what? It goes parabolic in 2 or 3 years, and I had that time to accumulate. You know, it's better to accumulate 2 years early than a few days too late. So that's my take on it. Coming on down here. People are far too accustomed to crypto, and they think investing is like buying a lottery ticket. If one lottery ticket doesn't pay off instantly, then they sell it and go buy another lottery ticket. Sure, some people get rich, but a lot of people ultimately get burned on get-rich-quick schemes. I completely agree with that. That this channel isn't about getting rich quick. It's about building wealth. And there are times where you can build wealth very quickly. And we've got instances on this channel where we've built a lot of wealth very quickly. SM Energy, CDAV, they were 10 baggers last year, or I should say this year. It's not done yet. Some of them went up almost 20 times their money, SM Energy. A lot of the energy companies went up very, very fast and very well. And I think it's going to continue to go up. We've just had the first leg. It pulls back, and we're going to get another big, huge leg that comes up in front of us. I can't tell you the exact timing. And we could still have a little bit more downside, but I see that as buying opportunities. Why? You're buying, we've got inflation everywhere. We've got currencies that are starting to fail. And they're going to start, their first instincts may be to run to the dollar, which is fine, and dollar-denominated assets. Because if your currency is getting wiped out, you can invest in stocks in a strong currency, the United States stock market, and it's a play on a currency and on an asset. But all that's going to rotate or unwind at some point. I'm saying that the unwind is going to happen because the dollar is also being inflated away, which means everyone's going to run to physical things. So the play here is the physical things. And the reason it's the play is because you've got the least risk to the downside of it. So now's the time to ante up on it. Why would I ante up on it? Because commodities are super cheap in relationship to stocks and all these other items. And physical metals are. Precious metals. Not physical metals, precious metals. They're super cheap. So when you can buy the stuff for free, so to speak, the closest you can to free, that's when you take the bet. It's huge upside reward. very small downside risk, that's your asymmetric bet. It's a huge asymmetric bet in all of these areas. And if you can risk a little bit of money and have a huge upside return, well, why not do it? It's also protection against all of the, I call it stupidity going on with this money printing stuff. And we also have energy crises. It says, Andy, what about the situation we have a shortage of energy sources? It will raise the price of energy and then lead to higher prices of many goods. It can happen even without significant empty money supply. I agree. But we've got both. We've got money supply rolling through they're printing that like heck, and we have an energy crisis. I don't know how this is going to, what do you think how do you think this is going to resolve itself? With far higher prices. One, you've got the inflation aspect. Two, you've got the supply demand of energy and the cost of energy increasing. Now, if we have a stable money supply where it's not increasing, what happens is if energy goes up in price, it's drawing currency from other sectors to it, signaling that we have a problem in that sector, which means that producers become poorer and the people who produce energy become richer. It would draw currency. But if you have a bunch of inflation thrown in the mix as well, it just hides everything. You don't know what's getting hit and what's going up because everything's going up. And that's why you have ratios, because you can see the money flows from one sector to another sector. And it's genius, guys. It really is. Like, that's the only way that you can see this stuff clearly without a bunch of money being like piled on and trying to hide everything. So, I mean, that's my take on it. I'll end it there. We're getting kind of long here. So hopefully you guys got something from the clip. Give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.